So now it's my privilege and honor to present somebody who's a kind of used to be a sibling for me. So I've been on trips with Monish and with Monsoon in India, where I don't know why we related to each other as siblings, and it was so much fun having breakfast with, I don't know, she's a sibling in a way. That's the relationship that I have with her. We both look up to Monish. He's both taught us so much. We've both learned from him so many things about life, sitting in the back of a taxi with my shoes off in between the seats in the front, talking about being late to meetings, talking about taxi drivers, talking about all sorts of things. He comes up, Monish, and I guess Monsoon has had it. You can come up already, a lot more than I do. I don't know if Monish is in the room already, but he always like sort of randomly quote from Indian poetry and relevant to the subject, which is so much fun. So I share that with Monsoon. I give you Monsoon.
Thank you. Okay, great. I have a lot of photos of Guy with his shoes off on my Snapchat because, yeah, we would be waiting for a meeting, and Indians, we run late on time. So the meeting would be starting 15, 20 minutes, and then my dad likes to come early, so we would be there for almost like 40 minutes before the meeting would start. And I have one really nice photo of Guy lying down on the couch with his shoes off, and we're waiting to meet the CEO of some public Indian company. And we've also, I think our other really fun trip was to the Mao Tai factory in Zuni. Yeah, that was a lot of fun. Okay, so it is so lovely to be here today in Omaha. I'm just going to rearrange this a little bit so I can see my notes. Okay. Yeah, so it's so lovely to be here today in Omaha. This weekend is my 13th Berkshire Hathaway weekend, and I'm very excited for what Buffett has to say tomorrow. I'm sure everyone in this room feels the same way. And I want to introduce you all to an investment idea. We're actually going to talk about a company. And so the first thing we're going to do is we're going to talk about one of Buffett's principles. The second thing we're going to do is examine that principle in today's market. And then we'll talk about the investment idea. And you might stand to make a little money. So this, before we get into the quote and Buffett, this photo was taken by Michael O'Brien in 1988. And Michael is in the room. It's right there. A little hello. And I've overlaid the photo with some text. So Buffett says, in an inflationary world, a toll bridge would be a great thing to own because you've laid out the capital costs, you've built it in old dollars, and you don't have to keep replacing it. You make all your money in new dollars. It's a great principle. And the toll bridge I want to talk about today are dominant stock exchanges. So dominant stock exchanges are natural monopolies. They are exceptional businesses across the globe. They have very high return on equity. They have high margins and very high operating leverage. You and I, when we trade stocks, we don't notice any of the fees that we pay to the exchange. And because these transactions are fully digital, it's highly profitable. I'm just going to put this down. It's highly profitable. And the exchange takes a very small cut out of every single transaction. And the stock exchanges are agnostic toll bridges. So it doesn't matter if you're buying or selling, if the market is going up or down. The exchange will make fees on every single transaction, and they're going to make a ton of money on it. So the stock exchange I want to talk about today is the National Stock Exchange of India, or the NSE. So the NSE provides a platform for companies to list themselves to IPO. Last year, India had 327 IPOs, and the NASDAQ had 171. And now this is a smart room. You're all going to be thinking, well, surely the NASDAQ probably raised more than the NSE. And you're correct. The NASDAQ last year raised $23 billion US through IPOs, but the NSE raised $19.9 billion, $20 billion through IPOs. That's exceptional for an emerging market. The NSE also sells corporate bonds and securities. They provide a place for us to buy and sell stock. We're very familiar with this. And they also maintain the Nifty 50 index and a couple of other major market indices. Other than that, you can sell equities, ETFs, mutual funds, derivatives, currency derivatives, and debt instruments. We're very familiar with the stock exchange. The main reason why the NSE is such an exciting investment is because of the backdrop of the Indian financial market. So Indians traditionally love to invest in three things: fixed deposits, real estate, and gold. Indians own 25% of the world's gold, and Indian women, we own about 16% of the world's gold. Indians love to invest in things that they can feel, see, and touch, which makes sense traditionally. But there are strong trends in India moving towards to securities and stocks as a serious asset class, and it shows up in the numbers. So in 2015, we had 25 million brokerage accounts in India. This is a population over a billion people, 1.4 billion people. Right before COVID, we had 40 million brokerage accounts. And in COVID, we saw the biggest bump. So the same way in the US, where everyone was at home trading on Robinhood, the same thing happened in India on Zerodha and Grow, where we had 60 million brokerage accounts added over an 18-month period. And a lot of critics like to say it was a one-time thing, it was COVID, everyone was at home. And it's not true. Ever since 2022, every single year, we've added 25 million brokerage accounts, new brokerage accounts to India. This isn't 175 million people. This is 175 million brokerage accounts. So on average, maybe 1.7 brokerage account per person, which gives us a penetration of less than 7% of the total Indian market. This is an incredible tailwind of flow for any toll bridge. And the NSE stands to make a lot of money from this. Okay, so the other stock exchange in India is the Bombay Stock Exchange, or the BSE. And the BSE and the NSE have the same 1,300 trading partners, or brokerages that they trade with. However, the NSE holds the majority of the daily liquidity. Across every metric, derivatives, equities, debt, everything, mutual funds, there is natural favoritism towards the NSE, and the regulator is very familiar with this and not excited about it. So they frequently will give the Bombay Stock Exchange first entry to a new market. And by the time they clear the NSE, even when the Bombay Stock Exchange has a 12-month head start, the NSE within 6 months takes the majority of the share. There is natural favoritism for the NSE in India. So the Bombay Stock Exchange right now trades at 60 times, roughly 60 times for every dollar of profit. And the NSE trades at 30 times for every dollar of profit. And the reason for the discrepancy is because the NSE is currently privately held by 22,000 shareholders in India, and the BSE is publicly traded. So we have about a 50% discount to its significantly worse competitor. We know that toll bridges are great investments. Buffett says so, and he knows everything. We also know that the NSE is an agnostic toll bridge. If it goes up or down, they make money. It doesn't matter. It's also set with very healthy flows from the Indian financial market and the trend of the young generation moving more and more towards the stock market. And the median age in India is 29. So we have a very young population. And yeah, the NSE is a high growth business growing at a significant discount to its significantly worse competitor. And I want to tell you, like, the difference isn't like 60-40. It's like 85%, 15. It's a huge difference. And so yeah, so if this investment idea is interesting, please feel free to contact me for more information. I want to sincerely thank Team Aquamarine and Guy for having me speak with you all today. I think it's really sweet that they offered up for all of us here to enjoy together. And Guy, are we going to do questions?
I think we are.
Okay, let's do
If David
questions.
allows. Well, I'm first of all going to apologize. I was so blown away by Brian's speech that apparently there are a couple of questions. So if you want to transfer your question that you were standing there and I didn't notice you to Monsoon, you're welcome to transfer it to Monsoon if you want to get up. But I guess I'll go straight into my question. I was with Girish, who was over here in the audience in October, and I visited the National Stock Exchange.
Yes.
And I'm just going to ask a question for me while people gather at the mic. I understood the difference between the Bombay Stock Exchange because we also visited them on Dalal Street. If you wonder why Monish Pabrai appears in stock holdings with Dalal Street, so that is the street that's like Wall Street for India. So the National Stock Exchange wants to go after the energy trading business. And I understood that very clearly when I was at that meeting, and I reevaluated my investment in India Energy Exchange. But they're not a publicly traded company.
No.
And they're also highly regulated.
Yes.
I don't know, can you explain the dynamics a little bit and the politics behind it? Because I understood in that meeting, I don't know if Girish is in the room, but politics plays a much...
He's right there.
Girish, do you want to comment? No, he doesn't.
You're more than welcome to.
So what is your understanding of the regulatory politics behind what is going on in India? So I show up as a US investor or a Western investor and I don't see the politics. Can you let us in a little bit on what's going on behind the scenes?
I think that's a really good question.
And before I get you to
Yes.
answer it, I'm going to try again with Girish.
Yeah, you should,
The
Girish, you should
eminence
come up.
grise on the floor.
I
Come on,
bump
Girish.
into Girish in India when we're both meeting separate companies
I
at
had
the same hotels.
Do you mind bringing him up?
Yeah,
on there?
please. No, I would love that.
So
I love his notes, so it's super exciting for me. that he
I
gets to
had the
come.
most amazing week with Girish. Like, it was awesome. Come up and you ask the better question. So why don't you answer my question,
Yes.
and then Girish will ask the next question.
Perfect.
Sure.
Okay, so for Guy's question that asks about the regulatory kind of framework that India has, I think there's a couple of good explanations that don't have to do with the NSE that explain how Delhi thinks about it. So I have two examples. The first is we had bomb attacks in the Taj Hotel in Mumbai in India, 2011? I forgot what year, some year. And what they knew was that one of the terrorists had visited India twice on a visa within a 6-month period. So then what they did is they said nobody can come to India twice within a 6-month period on a visa to India, which was hard for us coming from the US to visit. And I think they turned back that rule after almost 3 years. So, and the other example is Delhi does not want to have Indians gambling, which is fine if they feel that way. And so what they did is they put a 26% goods and services tax on betting in India, but it's not on the gains or the losses, it's on the bet. So if you make a 100 rupee bet, you pay 26 rupees on top of that in tax, which I think there's nowhere in the world that does that. The tax is on the gains against the losses. And so what we've noticed with India is if they feel something is a little bit off, they come down with a severe punishment. So yeah, between the NSE and the BSE, all the liquidity is on NSE. The regulator does not like that. I think they're worried about it not being a two-player market. So they put different roadblocks into place. One example is the derivatives market, or the derivatives, 99% of derivatives in India go through NSE. The regulator was upset, SEBI, which is the Indian SEC, and they put a rule that any contract expiring on Friday has to clear through the Bombay Stock Exchange. We have not seen that anywhere in the world. So now they have 85% share of the derivatives market. It's still a majority share. And I think I actually like that it's highly regulated. I think, so the NSE was born out of a problem with the BSE in 1992, the Harshad Mehta scandal. the Indian government put a committee of 5 people to figure out how to make the Indian market more transparent for trading, and the NSE was their solution. So it's highly regulated. It's an excellent business. It's at a 60 billion US dollar market cap, and it serves a great purpose. And it's just it's a good toll bridge. So yeah, I'm excited for Girish's question.
No, I'll ask a question. I guess the futures and options trading in India is very, very high relative to anywhere else in the world. And it's a bit gambling,
Yeah.
Very hot with personal, individual investors and stuff. And a lot of the earnings for NSE are from that.
Yes.
So how do you feel about that? And could it go down a lot? I think the government's concerned. So
No,
maybe
yeah.
you
So
can talk about that.
I think there was some statistic of there were a lot of people trading in the derivatives market in India. The NSE is the largest exchange for derivatives 5 years in a row in the world. And they were worried about the wrong types of people losing money on futures and options in India. And they put actually a ton of regulation into that just recently, in the last 2 or 3 months. And so the NSE is going to see a hit on revenue and profit from that. But when I talked to the NSE's team about it, they agree with that regulation. They think it makes sense. They think in the long term they're going to be fine. And they want the right people who are who know what they're doing to be involved in the market. They're pushing for financial literacy. And we're also seeing a lot of high frequency trading coming in from European and US funds into India, which I think is a better tailwind for this kind of class of investment. And I would prefer it to not be not as well financially literate Indians than, I think it's the correct move. And I do think there needs to be a little bit of cleanup, and I think they're doing the best they can. Yeah.
I see nobody at the mic, so
Okay.
David, is that okay so we have no questions at the mic. Girish is walking off because he
Yes.
doesn't like the limelight, which is one of the reasons why I love him. He's the most amazing thinker.
Yes.
And many of the best minds, you don't actually find them on stages because they're quietly beavering away. That's true of so many people, and it's true of Girish. But any questions from the audience before we move on? No?
There's one right there.
Oh, so going forwards, you need to go to the mic, but go ahead.
What's the average holding period of a stock in India, and how has the trend been going, say, over the last decade?
I actually don't know the answer to that question, but I do know Indians are long-term holders. It would not be as short as Turkey. That's, I think, like a 3-day holding period. And I actually would go as far to say is Indians probably are holding equities longer than Americans. Just because of there are some real estate, gold, fixed deposit holding tendencies. I would assume it's longer, but I actually don't know exactly what it is. But great question.
My last question.
Yes.
How do you divide your portfolio between, you're an American and you're also Indian. So is your portfolio, how much of it is US, how much of it is Europe? I know that you're also a big fan of LVMH.
Oh, yes.
And how do you decide to allocate between the three, if you like?
I don't think about it geography by geography. I think about it company by company. But I would say the geography does play a role. The Indian market is quite volatile, so I don't like to size it up too much. Right now it's about 30%, and the US is 50, and then Europe is 10. And I see it changing in the future. And I don't know. I think what I like is that I look at it as just individual companies, one by one, and not so much, we can't have more than 40% of our companies in Europe or India. Yeah. How about you?
so
How do you
much.
how do
Yeah,
you think
exactly.
about your Guy also invests in
I'm
India,
not,
so
I'm not here to ask.
but I would like
answer
to know.
questions.
I would like to know. I would like to know how you think about it country by country so that I can learn and we can all learn.
One of the best performing positions in my portfolio is a company that was spun out by Fiat.
Yes.
The only reason why I learned about Fiat is through your father, and I looked at a company trading at 1 times earnings. And another company in my portfolio is Exor. Exor decided to sell down their shares of Ferrari because it had become more than 50% of their market cap. And I find repeatedly that I have companies that I put in at 5%, and suddenly become 25%, 30% of the portfolio. And I wonder at what point I need to do a John Elkann and sell down. And I have no bias towards how much in any particular country, although, yes, so it's a hard question.
No, although what? Although what?
Warren just sold half of his portfolio.
Yeah.
You know? And I'm glad that he did that for himself, but I'm glad I didn't do that for myself. So I don't really know the answer. That's why I get all these people on stage. Maybe they can tell me the answer. But thank you.
Thank you, Guy.
so much,
Yes,
Monsoon.
thank you, everyone.